Welcome to the Real P&L Trading Show, where every week I show my real accounts, each one tied to a specific trading system, so you can see exactly how each strategy performs in real time. I also share my proprietary safe wheel strategy for free, so I look forward to you guys being here today. Let me know that everything is working okay in the chat, that you're hearing me, you see me, and that everything's working. And also be sure to post any questions you might have. You might have a question about how I trade. And if you do, be sure to ask those questions earlier rather than later, because that helps me get to the answers faster here. Good. You guys are letting me know that the audio is working. Everything is working. I appreciate that very much. Let's start with, how is the Earnings Edge doing? What happened last week? Let's see. This is not my Earnings Edge account. This one is here. And let's go through my positions here. I'd like to show you, that's not what I want to show you. Here. So you can see all the trades that I've made so far this year in 2025. And I'm up $11,400, starting with $6,000. So I'm doing pretty well. And the net lick is $16,794. Let's look at the spreadsheet here. It's easier to kind of track with the spreadsheet. The last trade I made was with MU. I made $1,113. Since I upgraded to my 3.0 system in 2025, I have 13 wins, 1 loss. My average win is 916. My average loss is 516. Now, I did not make a trade last week. Nothing fit through the filters. If nothing fits through the filters, I'm not going to make a trade, right? I only going to take high quality trades. Most weeks I do make a trade, but last week I did not. I think we're coming in the earnings season here. Yeah, we are for sure. So there should be plenty of trades coming up. If you look over the history of the account since 2022, you can see that I outperformed the market in 2022, 63%. The market was down 19. 2023, I did 17%. The market was up 24. In 2024, it was down 36%. The market was up 23. And so far this year in 2025, with my new system, I'm up 177%, and the market's up quite a bit. Let's see what SPY is trading. 616.54. Boy, it's up a lot. Up 5.3% year to date. So it's not up too much this year. Maybe on average, it's having an average year at this point. Up 5.3%. So you can see that since inception of 2022 with this system, of up 235% with the Earnings Edge, and the market's up around almost 30% over the last 3.5 years. Okay, so that's the Earnings Edge. Not much to report there again. Still have the same P&L from last week, $16,794. Let's go to the PL5 Pro. This is where I have a majority of my net of my liquid net worth. And let's take a look at that account. Last time it had 408,115. I don't think it's that high. Let's take a look at it. It should be this account here. 407.86. You can see the net liquidation, 407.86. So down a little bit, not significant. But you can see I am down this year about 13%. This is the heaviest loss of year. It's not a loss typically, but I think by the end of the year, I'll be able to get back to break even. Maybe I'll catch the S&P this year. In July 19th, 2024 is when I started this system, or started trading it live. I've been trading this type of system for about 6 years now, maybe 7. But in 2024, for the last half of 2024, it was up 16%. The market was up 6.65. This year, down 13. The market's up 5.3. So you can see I'm pretty much at break even with mine, and the market's up 12.3. So I am underperforming this year. The PL5 Pro, it's pretty rare that I underperform the market. I think I underperformed in 2017, possibly 2019, and this year. So typically I do not underperform the market, but that's what's happening so far this year. All right, let's talk about the Premier Level 5, not the Pro, but the Premier Level 5. This one I want to save on commission, so I use Interactive Brokers because I trade futures options on ES /ES. And so I use interactive brokers. And for that, I can't show you the whole screen because it'll show my account number. So here's how much is in the account: 32,338, 32,338. So it's up from last week, 32,388. And you can see how it did. I started sharing this live on July 16th, 2024, the middle of 2024. It did 10.2% in 2024 for that last half, and the S&P was up about 4%. So outperformed there. And so far this year, it's down about 2%. The market's up 5.3. So you can see that the PL5, this one's more tied to the S&P 500, specifically designed to outperform the S&P 500, and it's up since inception about 8%, and the S&P is up about 9.5. So underperforming there by about a 1.5%. Not too significant. I really believe that this will pass the S&P by the end of the year, and that's what's happening with that one. This one's specifically designed to outperform the S&P. Okay, now we have the safe wheel. So with the safe wheel, we can see the results over 2022 vastly outperformed, 2023 underperformed, 2024 underperformed here. But here in 2025, let's see what my account balance is here with Safe Wheel account. Account here. 5469 is my net liquidation. Notice I'm showing you my net liquidation every week. 5469. So I'm up a little bit. And the Safe Wheel year to date is at break even, where the market's up 5.3%. So underperforming this year, and overall since 2022, I'm up 9.38%. The market's up around 30%. So underperforming there. This has about half the drawdowns as the S&P 500. So you can pretty much double this if you want to make a comparison. So I'm still underperforming a little bit, 18% to 29% overall. So that's what's happening with the safe wheel. What's cool about the safe wheel is it has exact strict rules. It has a flow chart, tells you exactly what to do, when to do it, has the sizing, has everything. You don't have to think about it. And I think that's the way it should be, because whenever you back test something, it needs to have very specific black and white rules that can be repeatable. If you have rules that are subjective, you can't really back test it. And if you can't back test it, how can you be confident in actually investing real money into it? You really can't. So that's what's really good about all of my systems. But the safe wheel specifically tells you exactly what to do and when. And basically we run the wheel strategy, but we do it hedged. So we don't see the big drawdowns, or we don't get stuck in positions with the safe wheel. Also, just want to let you know that the safe wheel is available for free for a limited time. Right now, I'm actually giving away the whole course. Just hit the link in the description. You can get access to the whole course for free right now. Okay, so let's actually trade. I'm going to actually trade the safe wheel now. I am in LI. LI is the stock that I'm trading, and I picked the stock because it's between $20 and $40. So I need to size properly. So I'm between $20 and $40 here at LI here. It's trading at 27.29. Now, if you look at my positions, you can see that I'm long 200 shares. That means I've been assigned twice. I've sold puts 2 separate times, one at the $30 level and I got assigned, one at the $28.50 level and I got assigned. So I own 200 shares. So now my next goal is to sell covered calls. Now, first thing I want to do though is I want to make sure that my hedges are in place and that they're proper. And by the way, last week I sold a covered call, and it was actually my long call. So I've never really done that before. That was kind of interesting, but kind of canceled out my long call there. So if you have any questions about that, let me know. Okay, so what's happening now? So what about my hedges? I've got my $30 long call here, where I paid about $6 for it, and I bought that on Friday. And then I have my 3 put hedges to protect my portfolio, because I look at this account as a whole total portfolio, right? It's not just a trade here and a trade there. And by the way, when I show you guys my net liquidation and I show you how I'm doing for the year, I'm not showing you how I did over the last 2 months because maybe I had a good month or two, or maybe I had a good last 3 weeks, and you only see what I did in the last 3 weeks. You want to see how things are going over the whole portfolio over a longer time period. You want to see the bigger picture because sometimes instructors can, what they can do is they'll show you what they've done in the last 3 weeks because they've done quite well. But if they haven't done well in the last 2 or 3 weeks, they'll kind of not show it. Like they'll avoid showing their account for a while until it starts doing better, and then they'll show it, and then you'll see the last 2 weeks. Not here. You're going to see the whole thing. You're going to see where I started in 2025. What was my beginning balance in 2025, and what is it today? Right? I'm not just doing what have I done lately for you. All right, so here, looking at this, my there's 3 questions I need to ask. Number one, do I own 200 shares? And the answer is yes. And if I do, has it paid off? In other words, have I made enough money off of this to pay for my losses in my shares? The answer is no. I'm up like 22 bucks here and I'm down like $400 on my shares. So no, I have not. This has not paid off. So that's the answer number no to that question. Number two question is it under 100 days? Is it depreciating too fast? The answer is no. Okay, so, and then the other question is this $23 put within 70% of the 2720? So is it close enough to protect me? Let me take a look here. I'm pretty sure that it's fine, but I'll just do it here. So 23 divided by 2725. 27.25. Is it close enough? Yeah, it's within 84%. So the answer, so there's nothing to do with the put hedge. Obviously, I buy this long call. I've made every single trade live on YouTube, except for the long calls that I pay $5 or $6 for every Friday. Other than that, I've made every trade in this account live. Okay, so there's your live, your result there that the put hedge is good. This put's good. Now I got to trade the wheel. And remember, I got assigned at $30 and I got assigned at $28.50. So I want to try to sell a covered call at $30. And if I can't, then I'm going to try to sell it at $28.50 or higher. I always want to sell it out of the money. So let's take a look and see what I can and cannot do. I'm going to sell it in the nearest expiration. So we're going to have Friday's a holiday. Happy 4th of July, by the way. And we are going to only have 3 days until expiration. So at the $30 level, I cannot sell something. I want to get at least 30 cents. That's a no. $28.50, I can't sell anything for at least the $28.50 range. Guess what? I can't sell any premium at the level that I want to sell it at. In other words, at my assigned price. So what am I going to do? I'm going to do what I call the blaze of glory, and I'm going to just sell out at the highest extrinsic value that I can get. Looking at the $27, my extrinsic value is around 33 to 36 cents. And looking at the $27.50, my extrinsic value is 39 to 41. So I'm going to sell the $27.50. Now I might take a loss on my shares, but I'm always going to be selling premium. And I'm going to be looking for, I'm probably going to get my shares called away. That's okay. I mean, I'm always going to be collecting premium. So I'm always collecting. So I'm going to sell 2 of these because I have 200 long shares. So let's go to 40 and let's go to 2. And I got filled there. So now I just collected another $80 and I may get called away from all of my position and I might not. You will see what happens, but I am always collecting premium. So I'm never stuck in a position. I'm always collecting premium. So right there, I did sell under my cost basis. I understand that I did that. Yes. And I probably collect enough premium along the way to make up for any of the potential losses that I'm going to have. But that is how you do the safe whale there. You always, ABC, always be collecting. So I collected another $80. And also I'm hedged. It would be nice if the market or the LI just dropped down below, 25, 23, 20. That would be very good for me. If it goes up above 27.50, I'll get called away, and that's fine too, because I probably collected enough premium along the way to maybe break even and then start over again. Okay, so those are the trades for today. Let's see if there's any questions or comments. Okay, you guys are letting me know the audio is good. I appreciate that. Kevin says good morning. Good morning, Kevin. Let's see here. Sean has a question. Let's see what it says here. I've been in Unity. I don't know if I've heard of that stock, 5 or 6 cycles. And when I started, the spreads were around 3. Now the spreads vary between 5 and 10 cents or more. Okay, that's probably why I haven't heard of them, because they probably don't have a good liquidity. So do you think I move to something else or stay with you? Unity. Well, you're not necessarily with me, because if you were with me, I think you would be in LI. And probably when you got into this stock and the spreads were 0.03, let's see what the spreads are here with the LI. See the 2 cents here. It's just, well, I mean, you're not seeing the liquidity right now because there's no volume. But when you do see some liquidity, they're about 2 cents, 1 cent, 2 cent. But with this particular stock that you're talking about, probably what happened was the spreads might have been smaller at a certain time frame, and that was possibly around earnings. So a lot of times around earnings, the spreads can get a little better. And now you can see they're between 5 and 10 cents. I would not necessarily stay in this position, but I would let it play out. In other words, I would let it play out. That's what I would do. I'd let it play out. And then when it was time to start over, or redo your put hedge, as long as you're not long shares, I would pick a different underlying one that was more liquid than this. But I would still let it play out. I wouldn't just get out of it. That's what I would do. Alex is asking, can you show the analyzed chart? Sure. Where are we trading at? 27.25. Right about here. Yeah. So you can see the reason why this is below the break-even line is because it doesn't take into account all the premium that I've collected running this position, right? So you don't see what really happened in the past when you're looking at this particular chart here. It does look like it has quite a bit of downside. Let's see where my put hedge is living over here. Let's make this a little bigger. Yeah, there's your analyzed chart there. Will says U is probably the ticker. I think you're talking about this. Unity U. Oh, I don't think I've ever even looked at this. Let's see what it looks like. Is this U? Unity software. Okay. That's not too bad. There's some decent liquidity in here. I need to add that to my list. I don't think I have that in my list. Unity software. You guys give me a new stock here that I can put in here. Yeah, that's not a bad one at all. And what is it trading? 24. Yeah, good. Got another stock that I could potentially move to. That's a good one. I would not just necessarily get out. I don't see the 5 to 10 cent spread. I mean, I think when there's no volume, you don't get some the liquidity. But now you can see that this is a pretty good stock right here to use. Tron says, thanks, Will. That's what I meant. Yeah, good. I appreciate, Tron, you showing me that stock. Liquidity is pretty good in Unity and has been in the 65 to 75% range for a while. I'm assuming you're talking about the implied volatility. And Tron says, I'm up about 4% over the last month or so. Nice. Nice. Less is More says, U is a good one to trade, and I would continue to wheel it. Yeah, I like it. I might move to it if I get out of LI. I don't want to necessarily go right back into LI for tax reasons, so I might go into a new stock And I might pick this one. Rich says, yeah, last Tuesday, I figured out what happened with our closing long and short calls. I sold another call for $47 and bought a call hedge. Yeah, nothing wrong with that at all. To keep the position rolling there. But one of the things is I was long 200 shares, and I was just basically uh, I wouldn't say naked, but I didn't have any positions, I wasn't short any calls. In other words, I didn't have any assignment risk, and I was long 200 shares, so I wasn't worried about the upside, even though I didn't have a little long call there. But the way you did it would work too. Tron says, thanks for the feedback. You're welcome. And I hope this makes sense here, what Rich is talking about. I'll try to explain it a little bit more. Last week, I had bought a call on Friday, and that particular call happened to be the one that I wanted to sell against my long 100 shares. And so I sold it, and then I ended up canceling out both of the long call that I bought for 5 cents, and I ended up selling it for around 30 cents or 28 cents. So I actually just made a profit off of it, but I ended up not having that little long call, and I ended up not having a short call. So in order to cap my gains, so I was just long 200 shares, which was fine. I was protected to the upside because I was long 200 shares, and I was had my downside protection with the put hedge. So that was fine, the way things worked out for me. But what Rich said was, well, he figured out that he was kind of naked, and so he decided to go ahead and sell another call, collect some more premium, and then buy another long call for the upside protection, which was fine to do that. And that's typically how it happens. Like what's happening right now, that's what's happening. I've got these. I'm short here, so I have assignment risk, and then I'm long at the 30 in case this thing just blows out and goes to 50, some takeover bid or something. I'm not going to make any money off my long shares. So that's why I have this little long call right here. A little meaning I paid very little for it. Rich says, will you buy a call on Thursday? Yes. I will buy a long call. Now it just depends. If I know that I'm going to get assigned, if LI is trading above 27.50, I'm probably not going to buy that long call, right? Because I'm going to get called away, and yeah, even then, I should probably buy it anyways because I'm still going to be along these puts. So yeah, I'm going to go in and buy that long call just to protect these puts here. It'll be $5. So the answer is yes. But even depending, it doesn't matter what happens here with this, whether I get assigned or not, I'll still protect these hedges, these put hedges. So I'll pay $5 to protect these because they're worth $1.90. So I don't want to lose all of that. Okay. So I don't see any other questions or comments. Oh, one thing, please, if you like the fact that I show you exactly how each system is doing in a separate account, and that I actually share my net liquidation, so I show you, wins, losses, it doesn't matter. Net liquidation is what matters. And you see the actual real results. I don't think you see that anywhere else. There's maybe one other guy right now that's out there that's kind of sharing his P&L, but he doesn't necessarily show it all the way from the beginning of the year. Kind of shows, over the last 3 weeks or month or whatever, which is good, better than most for sure. But if you like the fact that I'm sharing my actual P&L, please hit that like button, because if you hit the like button, it helps more people find me. And that's my goal. I want people to find me, and I want to make this the standard in this industry that you share your net liquidation, right? I mean, I just can't imagine why people would take advice from someone about trading, but they don't even share their results. How does that happen? I don't know. But if you hit the like button, it'll help more people understand what I just said, and maybe we can change this industry and get people to actually share their net liquidation. Okay, so I don't see any more questions or comments. So in parting, I always like to say, if the P&L is not real, what else are they trying to conceal? I'll be back next week, and I appreciate you guys.